Harvey Capital Talks brought to you by Dicor, at the core of everything you do. Hey, welcome to RV Capital Talk. I'm Andy McCaskey from RVNN TV and introducing Mr. Sherman Goldenberg, host of the show.
Hi, thank you, Andy. We're here today with Peter Lannon, GE Capital, Commercial Distribution Finance, Managing Director, Recreational Vehicle Group. Did I get that right, Pete?
Yes, it is. How are you guys today?
Pretty good. How are you?
Doing well, thank you.
So we're here to talk about finance-related things, but first I'd like to touch on the fact that I have in my hands, Pete, a little bio which says that you're a native of Chicago.
That is correct. 40-plus years.
How many?
40-plus years. I was born and raised in Chicago and lived there up until the mid-'90s.
And that you're a lawyer?
I am.
And that in addition to your recreational vehicle duties at GE, you also have an interesting list of motorsports products that you're responsible for as well, correct?
That is correct. Besides from the recreational vehicle, I'm responsible for our motorsports business. List of manufacturers include Polaris, Yamaha, Suzuki, Arctic Cat, many of the European brands as well, Triumph, Ducati. So we're pretty proud of the business that we do across all of our floor plan and inventory financing.
All-terrain vehicles, utility vehicles, personal watercraft, I'm reading, jet boats and marine engines, etc., right?
That's correct.
So, you know, focusing on the recreation vehicle market, what in the general economy, what's the picture right now? We're in April of 2012. Without me leading you any more than that, what's the picture right now in general and in this market?
Well, we think the picture is actually getting brighter. We're seeing very good, strong activity with recreational vehicles. I know a lot of the attention is, today in the marketplace, it's on the towables and the Class C segment. Towables are what we think is a pretty hot segment right now. A lot of consumer activity. Dealers are selling through their product. They're reordering. Most of the factories are running pretty much close to full production on their towable lines. Where a lot of concern in the industry is right now is, frankly, it's at the high end, it's on the motorized, and that has been a bit sluggish, excuse me, even over compared to last year. But I think if we take a look underneath that, what we're seeing is we're seeing good retail activity there, but it isn't so much in the new units. We're seeing a lot of trade-up buying with people going into larger gas and into the diesels, and a greater percentage of those are buying used units right now. And when I probe dealers as to why that is, first of all, it's just a conservative buyer being a little more cautious. Secondly, these are trade-up buyers. They're experienced in the industry, and they know the care and the TLC that's gone into the maintenance of a 2-, 3-, and 4-year-old larger Class A. And they feel very confident in buying, and the used prices in that segment have been steadily strengthening now for well over a year, and have continued to strengthen even during the first quarter this year. So I think the fundamentals are good. I think there is some concern about the new mix, how much of the new compared to historical, but overall, very good. And what we're seeing also is a nice comparison to some of our other recreational industries as well, where sales went up sharply the first quarter across almost every segment. So for instance, in motorcycles, Harley-Davidson reported their results just this week. Their sales were up 26% first quarter in the U.S. versus same quarter last year. Polaris announced their sales were up 27% first quarter, 12 versus 11. We saw Brunswick announce good increases. And again, interestingly, in Brunswick, their smaller boat segments did extremely well. And then it got a little softer as you got up to the top of their product categories. But again, they also, in talking to marine dealers, there's quite a lot of used activity going on in those larger boat segments. So across many of the spectrums where there's consumer discretionary spending, particularly on larger ticket recreational products, very strong activity, just a certain amount of caution and conservatism as you get into the higher price points.
The dealer inventories in the recreation vehicle market, I was talking to some manufacturing friends, and they said that that's one question they would like to ask you about. How do they look?
Inventories are in very good shape. The turns are still extremely high historically. As an industry, I would say we always thought if we could get close to 2, we were in good shape. And what we've been seeing now steadily over the last year and a half, since certainly beginning of 10, and actually it started in late 09, and all through 11, is that turns have held steadily at the 2.2 to 2.5 level across the board.
Andy, before I ask him another question, perhaps we ought to take a quick break for our friends at Dicor.
Sounds like a great idea. We'll be back in a moment. RV Capital Talks brought to you by the Dicor Corporation. Dicor Corporation is 4 specialized companies serving the RV industry. Dicor Products, United Shade, Seal Design, and Vixen Composites. Whether it's RV wheels, walls, shades, seals, or other specialty products, Dicor Corporation is at the core of everything you do. And we're back here. Pete, just a question that came up during the break. What's happening in aged inventories?
Well, aged inventories are, again, at an all-time low. We have, as an industry, we're looking at probably less than 10% of the product on dealers' lots being over 1 year old. And that's a very, very healthy position, because it takes the huge discounting pressure off of dealers, and it certainly allows them to hold good margins and to be able to sell, at a profitable level. So we don't see any issue with aged inventory at all. Again, this is very much unlike what we were seeing in 06 and 07, and certainly the early part of 08 before it all hit us in the face.
Yeah. If you could summarize the outlook for the latter half of 2012 and on into 2013, how would you summarize that?
I think it's actually going to be stronger than what we're seeing from some of the industry statistics. Some of the projections that we're seeing in the RVIA numbers, I think, are going to be revised upwards as we process the activity during the first quarter and as we get into second quarter. So we're calling for right now, an upswing in expectations for the back half of the year off of what our original plans were. Again, based on what we saw during the first quarter.
Pete, all this good news is hard to take. We're not used to it after a long slog, out of the depths of the recession. What is going on? I mean, we're climbing out of this. The economy's recovering, evidently, despite all the debates we hear going on.
Well, we saw it this morning, Sherm. Government announced that GDP increased the first quarter 2.2. Some people are decrying that, saying it's lower than the 3% we saw in the fourth quarter. I suspect those numbers are going to be revised upward, as they typically do once they're 30 days past the quarter. But what it speaks to the fact is that unemployment is slowly but surely improving. Consumers are getting more confidence, and you're seeing more consumer spending on bigger ticket items, starting with automobiles and now moving in through the discretionary recreational products. So I think this is it's a resurgence. It's not going to take off like a rocket, and it may not impact the higher end as quickly as people would hope, but there is definite strength and an improving situation with the market. And that's why you see some of the manufacturers opening new plants and committing to build new plants and talking about expanding on shifts at existing facilities.
What lessons, from your perspective, has the industry experienced from its ride through the recession.
Well,
Go
what's
ahead.
most encouraging that we've seen is the dialogue that manufacturers are having with their dealers about paying attention to the turn or the retail sale of the product. And I would have to say, as an industry, we were all a little lax on that before the crisis, figuring that if a manufacturer could move product off of its production lots and into a dealer, that was the accomplishment of the job. And everybody now has a shared vision that the industry doesn't win until those units are not only delivered to the dealer, but are then subsequently sold to a customer. And that customer, of course, has to have a good experience so that they stay committed to the lifestyle and will return as a subsequent customer for more purchases in the future. So what I see is manufacturers now putting attention and having dialogue with dealers on making sure that the orders they place are going to retail sell through in a quick fashion, and then offering a faster reorder and replenishment cycle than they had in the past. And this is very difficult for manufacturers because the RV industry works best, most efficiently with a big batch production run. And it's been a lesson learned for manufacturers that smaller production run, quicker reorder, smaller orders are really for the good of the industry and for any specific manufacturer. And the dealers like it too because it keeps them with fresh inventory and not a lot of aged, which leads to discounting pressures and frankly, just led to a lot of the problems that we had.
Yeah. Pete, specific to General Electric, you're known as a floor plan lender. Do you have any new products that you're going to be introducing in the next products or services that you're going to be introducing in the next couple of months?
Yes, Andy, we do. In the next quarter, we're going to be introducing a 100% auction finance program for our dealers that finance their products they purchase at auction. Another thing we're going to be introducing is a adjusted rental fleet program for dealers so that they can more readily stock units for rent. And we found that to be a good part of the business that a lot of dealers are looking to expand with.
Pete, some people wonder if GE makes a return to the retail business. It used to be a player in retail. What's your response to that?
Well, Sherman, what we're looking to do right now is to find a solution, and we may be looking with partners or others as well. We understand that that retail financing is really what drives the ultimate retail sale, and we want to bring more solutions and more liquidity to that market space. For a variety of reasons, GE did not have a success with its prior program, and it's not likely we're going to be introducing our own program in the near future. But we are committed to bringing a solution to the retail side back to the industry.
At that, Pete, we appreciate the heck out of you joining us today, and we look forward to seeing you down the road here at industry events, and have a good one.
Yep. And on behalf,
thank you very much. Thank you, Sherman. Thank you, Andy.
RVNN, thanks very much for joining us, and for you at home watching, thanks for joining us as well. We'll see you next time.